Hello everyone. Today we want to go over what our investment strategy is in the world of crypto and how we manage our portfolio. So we run something that's called a barbell strategy. Now, where did a barbell strategy actually originate?
So I actually came across the barbell strategy reading one of Nassim Taleb's books, and he was really inspired by Mandelbrot, which has a book about the misbehavior of market. So we really like to take this stochastic approach because we know that these markets are inherently volatile. So you're going to see those whipsaws. We're going to see it up one day, we're going to see it down one day. So we like to take the barbell approach because a lot of cryptocurrency right now is speculative, right? Mm-hmm. We're going to make some claims in this video that by no means is advice. This is just how we kind of navigate the markets. But the readings of Mandelbrot and Taleb have actually been very applicable to what we see on a day-to-day basis. So we know that in that barbell approach, we're going to put the majority of our money into these speculative investments and hope that we see massive gains while we have some hedging against with some traditional investments that we also possess as well.
Very cool. So now how we break down our speculative investing in the crypto is going to look at a 50% investment in the big coins, the blue chip coins, if you would call them, the most secure, I guess, if you could use that term in crypto, but those are going to be the majority of our investment. So you can pick out 4 to 5 of the coins that you think are the biggest, the highest market cap, the most secure coins, and then put the majority of your money there. Then we break it down into around 30% of our fund is going to be invested in those growth coins. So these are going to be the ones that we still think have quite a bit of growth involved. So you've heard of ones like Stellar Lumens or maybe something like Zcash. Now we invest across a large amount of these. We're extremely diversified, but we pick more of these growth coins here, where each of them may only take up like 0.5% of our investment. Right?
We do like to be spread across a lot of these because we do know that, coming into this year, there can still be a lot of exponential gains in a lot of these coins, right? Mm-hmm. So some people might be fearful that, hey, I missed the boat in 2017. I didn't get in. I missed all these ICOs. I missed this huge rise in Bitcoin. But we really feel like it's not too late. We want to make sure that people are getting in. They're diversifying again because the market is heavily correlated. So if you're invested only in something like Bitcoin, you're going to actually be going with those market dynamics of Bitcoin. But if you're spread across some of these others that we like to actually hedge against, right? We have some of these that go in the inverse of Bitcoin. If Bitcoin's having a bad day, we're going to see our portfolio still either stay fairly steady or go up because we have some things that work against it. So you want to make sure that you're getting into some of these growth opportunities. I mean, you can get lucky. Yeah. We've done it ourselves. I don't want to say like, hey, I put in hours of research and then got into this one and now it's blown up and hey, kudos to me. We know that we get lucky, right? There's a lot of things that go into this. When we're looking at things like fundamental analysis, we're looking at, is the underlying technology good? But we also know that with this economy that we're in, with crypto essentially, is that things will actually get very excited. People get excited, right? Yeah. The fear of missing out. So we see huge trades in Japan and South Korea just driving up prices of assets where sometimes Jordan and I will think, do people even actually know what these cryptocurrencies are? And honestly, I don't think they do. So we're seeing some people that want to get in, right? You're going to see these continue to happen throughout 2018. So just make sure that you're diversified and playing with some of these dynamics because you're going to see exponential rise just on speculation and rumor alone.
Yeah, so this 30% is where you can do that kind of like playing around and make sure that you can buy probably as many coins as you would like to get into. Make sure you do look into them a little bit. Make sure it's not a bunch of nonsense because there is some of that out there. But try and diversify as much as you can in this 30%. Now, the final 20% we have here, this is where we save for what we call events-based trading. Now, the first part of that is going to be ICOs. Now, ICO is initial coin offering. That's when a new company comes out with a brand new coin or token and offers that to the public.
And really, it's a modern day initial public offering or an IPO, right? So we're looking at these, and we want to do some research to look into the team, to the technology. Where's it going to be listed? How are things going to be distributed? How much of these tokens is the team going to hold? How are they going to use these funds, right? So we want to see, is it a good idea? And so some of our portfolio, those funds are going to go towards those things, those projects that we believe in. Mm-hmm. But again, we're doing a lot of due diligence with this. Jordan and I have a background doing a bit of work in venture capital. So we want to make sure that, our readers and our listeners are doing a lot of those things too. Again, look at the team, look at the technology, look at the space, right? What are the other competitors in the space? And can these new companies coming out, are they going to take any of that market share? Yeah. So you want to make sure that you're looking at these things because, again, you can get it, at pennies on the dollar, but you got to make sure that there is some some value behind it to make sure that it does rise over time.
Absolutely. Now, other things that we look at in this event-based trading place is going to be things like forks that are coming out, right? So if Bitcoin is coming out with a fork, we might think that, hey, we want to dump a little bit extra money in there and that sort of thing so we can benefit off those almost like dividends, right?
And one of the things that you want to make sure that you realize with a fork is a lot of the times, because again, this market is so new, there's going to be a pump and dump strategy a lot of the time. So what does that mean, you might ask, right? So a pump and dump is that people get excited. People start putting money into Bitcoin. I want to put money into Bitcoin because I want whatever this other coin is on the other side of the fork, right? So we saw this play out with Bitcoin Cash. We saw this actually start to happen when the Segwit 2X was coming out. So you're going to see that. You're going to see, let's say it's trading at this and then it starts to go up as people want to buy in with this excitement. They also want that other coin. So the value actually pumps up, right? That price actually goes up. And then after the fork happens, a lot of times that value crashes because a lot of people understand that there isn't that intrinsic value there, that it was just up with the excitement of that. So you're going to see the price start to drop or depress, and you're also going to see what that value of that other token is. So just be aware of that pump and dump strategy when you're going in and you're navigating these things. If you're a believer in Bitcoin and you just really want to accumulate Bitcoin over time, which I think is smart, you want to have that in the future. You want to have as much Bitcoin as possible. And to hold it, to Jordan's point, is you are getting like a dividend, right? A lot of these coins are like a dividend for holding, kind of the oldest of these cryptocurrencies. So, again, whatever your strategy is, really, we just encourage you to do as much research as possible. So, watching this video, that's a start. You want to make sure you're reading some of the books as well, whether it's crypto assets or some of the books, again, that we referenced earlier. Just make sure you do have a game plan going in before you make any kind of investment.
I'm going to link a video down below of the top 5 things that we like to look at before we decide to invest. So watch that video so you can feel a little bit more educated before you go into investigating these coins. But the biggest takeaway from today is we want you to understand that probably around 50% or more of your money should be kept in the more secure, the bigger coins. Play around with around 30% in those growth coins, and then save 20% for that event-based trading, whether that's ICOs, forks, or just big events that are happening in the crypto space. Sign up for our newsletter down below. We're going to keep you updated on all those events that are going to come up, and we also will give you tips of new coins that we think are going to pop as well.
Thanks, guys.